Good afternoon, everyone. In today's video, we'll cover three different things. The first is an update to that TSLA Broken Wing Butterfly trade that we set up a couple days ago. This is where we were looking to try and play a move in this squeeze, along with our squeeze signal here, looking to play into 550, and then making this a Broken Wing Butterfly to have no upside risk in case we did overshoot that. So far, we're seeing a move in that direction, so we'll just do a little bit of an update there. And then second and third, I'll talk about Russell and DOW futures trades from today, both of which were winners. All right, so starting off first with the Tesla trade here, if we take a look, so I'll come into the Analyze tab here, which I think is the clearest way to try and paint this. This was the trade that we set up. This was a 530, 550, and 560 broken wing butterfly. If I uncheck this guy as well. When we set it up, this was trading anywhere between $1.55 and I believe $2.85, something like that. And if we take a look at where it's currently trading, it's up pretty nicely. So now it's up to 390 in terms of the debit in case you wanted to buy this. And in terms of the P&L here, you're making some good progress towards that 550 zone that we were looking for. Now, the one, I guess, caveat here is we were looking for this move to happen within 31 days when we set it up. This was that December expiration, and instead we're seeing this happen much quicker. So it would actually be beneficial for us if right here Tesla takes a bit of a pause, pulls back a little bit, maybe even to that market pulse line, or at the very least to 436.55 or 465.55, really taking a bit of a breather, allowing some of that theta from the options that we sold to really just decline in our favor, and then finally make that second thrust move up into 550. That would be our ideal game plan scenario if we were to try and make that perfect pin that we were talking about at that 1272 extension, the 550 mark. So in case we do see a pullback here, I think that's actually going to be something that is in our favor as opposed to against it, even though it's a counter trend move away from this bullish squeeze that we're looking at. One reason why that may potentially happen is you see here the squeeze technically today fired long, so it's now fired where it wouldn't be all that abnormal to see the squeeze die down a little bit in terms of momentum before again gearing right back up. So that's a quick little update on Tesla. Now if we come into the Russell futures first, we'll start with our 1 minute chart here and load in our scalper volatility box model, which is what we were using in the morning. All right, so if we start off with the Russell futures here, so in the morning we breached our upper bound of our volatility box line, and we also got the follow through that we were looking for from that line to continue to give us the confidence that, hey, the scalper volatility box models are being respected. Now, for the rest of the day, we were looking for breaches of either side sign entry lines. So you'll see for much of the day here, we really just chopped around sideways in between our sign entry lines. And then came that 11 to 12 p.m. Pacific hour in which we finally got a breach of our sign entry line. This came onto our dashboard. So once we had, really, if I just walk through the entire trajectory here, you'll see we had 3 squeeze signals populate, supported by a bullish market pulse line. That took us into the gray target line, which is really the target that you'd be looking at with any of these squeeze plays if you were looking to participate in that, a move into the volatility box. Then we saw a breach of our volatility box sign entry lines. We're then looking for an edge signal confirmation, in this case a bearish edge signal since we're looking to short. We did get that bearish signal along with an opportunity to enter at the sign line or better, and that was it. This is where the trade was a go. The bare minimum move that we were looking at in this trade was 4 points, and if you take a look to see what we ended up getting, we got 5.1, hitting our first target. Once we hit that first target, the second stop was moved to break even, looking to see if we can make a move down to our second target line, which was taken off here in this move up. So we only hit T1 in this Russell futures trade, and then really into the close here, you'll see the Russell really puke down lower. So you technically did hit that T2, but if you followed our rules, you were taken off at break even on that second contract without really being able to realize this gain with that second contract. Now, if we talk about our next trade here, which was in the Dow futures, very similar, right? So in the morning, we saw again a breach of our sign entry lines off of the scalper. Again, that move was respected. We saw a fade, again, giving us the confidence that the scalper was the model to be using today. Now, in that 7 to 8 a.m. Pacific hour, we came close to the sign entry line right here, but we missed it. So no trade, still chopping around sideways, looking for a breach of that sign entry line. Again, got fairly close here, didn't quite make it to the cyan line, so no trade. Now, finally, again, very similar to the Russell in that 11 to 12 p.m. Pacific hour, we had a breach of our cyan entry line right here. Once we had the breach, we're looking for an edge signal confirmation on that 1 minute chart. We got that. Once we got that, the trade was a go. We did get an opportunity to enter at the cyan line or better, and very similar to the Russell here, we hit only that first target, which in the case of the Dow was only 56, 57 points, and we ended up making a move 81 points with that second stop being moved move to break even, and then that second stop was taken off in this move right back up. So we didn't hit the second target in either the Dow or the Russell, but we still had some fairly first target wins here where you got at least what you had risked out of that contract, and then that second contract was taken off at break even. All right, so hope today's video gives you not only a good update to that Tesla trade for all of you that are in it, but also talk about some of the futures trades that we had today in the Russell and the Dow futures, where we hit both our first targets only before reversing and then stopping out of that second target at a break-even stop. Now, whenever we do see that second target being hit, that's where we get some really nice home run trades. I know a couple of you have also been asking around the idea of trailing stops. Of course, in this case, if on that second contract you were trailing your stop here instead of having an OCO order where it was either a stop or the second target, then you got a lot more money out of this trade. It was at least better than a break even compared to what our trade plan suggested here, which was a reversal where that was taken off at break even. Keep in mind, this does give you the trade-off though, where whenever we do hit our second target line here with a little bit of chop, that trailing stop will take you out of that trade versus the OCO clean type of order where you can just put it and walk away will keep you in that home run sort of a trade. So you can decide for yourself where on that trade-off spectrum you lie in terms of your trading style, but that first target is really a very clean, simple first target in which you're looking for that bare minimum move that we're looking for, which is the amount of money that we've risked. All right, hope this video helps. Take care, everyone. Good luck trading, and we'll see you in the next update.